Financial management is the backbone of any successful entrepreneurial venture. It involves the planning, organizing, directing, and controlling of financial activities, such as procurement and utilization of funds. For startups, effective financial management is not just about keeping books, but about making strategic decisions that affect survival, growth, and long-term sustainability. This module provides an exhaustive view of financial principles, tools, and practices tailored to the unique challenges and opportunities faced by entrepreneurs. Financial planning and forecasting. Financial planning involves outlining the venture's financial goals and mapping out how to achieve them. 1. Budgeting. Preparing detailed estimates of revenues, costs, and cash flows. 2. Sales forecasting. Projecting future sales based on market analysis and business plans. 3. Capital budgeting. Evaluating long-term investments and expenditures, using methods such as net present value, NPV, and internal rate of return, IRR. 4th, scenario planning. Preparing for best case, worst case, and most likely financial outcomes. 5. Contingency reserves. Allocating funds for unforeseen expenses and risks. Accurate financial planning ensures resource optimization and prepares the venture for uncertainties. Accounting fundamentals. Sound accounting provides the data foundation for financial decision-making: bookkeeping, recording all financial transactions systematically. Financial statements, preparing income statements, balance sheets, and cash flow statements. Accrual versus cash accounting. Understanding the differences and appropriate usage. Accounting standards and compliance. Adhering to regulatory requirements to ensure transparency and credibility. Management accounting. Using internal reports and analyses to guide strategic decisions. Entrepreneurs benefit from understanding accounting basics or hiring skilled professionals. Working capital management. Managing current assets and liabilities to maintain liquidity is critical. 1. Cash management. Ensuring sufficient cash flow for day-to-day operations. 2. Inventory management. Balancing stock levels to minimize holding costs and prevent stockouts. 3. Receivables. Management, efficient credit policies and collection processes. 4. Payables. Management, timing payments to suppliers without damaging relationships. 5. Cash conversion cycle. Monitoring the time lag between cash outflows and inflows. Effective working capital management supports operational continuity and financial health. Funding and capital structure. Entrepreneurs must strategically decide how to finance their ventures. Debt versus equity financing. Understanding benefits, costs, and risks associated with each. Optimal capital structure. Balancing leverage to minimize cost of capital and maintain control. Short-term versus long-term financing. Matching funding sources with asset life and cash flow profiles. Investor relations. Communicating with shareholders and creditors transparently. Financial covenants. Understanding loan conditions and compliance requirements. Financial decisions shape venture growth trajectories and investor confidence. Financial analysis and ratios. Analyzing financial statements helps entrepreneurs assess performance. Profitability ratios. Gross margin, net margin, and return on investment, ROI. Liquidity ratios. Current ratio, quick ratio, and cash ratio. Solvency ratios. Debt to equity, interest coverage. Efficiency ratios. Inventory turnover, receivables turnover. Trend analysis. Tracking financial performance over time for insights. Regular financial analysis supports informed decision-making and early problem detection. Cost management and pricing strategies. Controlling costs while pricing effectively maximizes profitability. Period. Fixed versus variable costs. Understanding cost behavior. Break-even analysis. Determining sales volume needed to cover costs. Cost volume profit, CVP. Analysis. Assessing profitability under different scenarios. Pricing models. Cost plus, value-based, penetration, skimming, and dynamic pricing. Margin management. Balancing competitive pricing with acceptable profit margins. You must blend cost discipline with market realities. Risk management and financial controls. Mitigating financial risks preserves venture stability. Risk identification, recognizing market, credit, operational, and financial risks. Internal controls, implementing procedures to prevent fraud, errors, and inefficiencies. Insurance, protecting assets and operations against unforeseen events. Diversification, spreading financial exposure across customers, products, and markets. Contingency planning, preparing financial buffers and exit strategies. Proactive risk management builds resilience and investor confidence. Taxation and regulatory compliance. Navigating tax laws and regulations is essential for legal and financial integrity. Business tax obligations. Understanding corporate taxes, VAT, payroll taxes, and filing requirements. Tax planning, utilizing incentives, credits, and deductions legally. Regulatory reporting, meeting statutory financial disclosures and audits. Cross-border taxation, handling international operations and transfer pricing if applicable. Ethical compliance, avoiding tax evasion and penalties. Compliance reduces legal risks and supports sustainable growth. Financial technology fintech for startups. Fintech solutions transform financial management for entrepreneurs. Cloud accounting software, QuickBooks, Xero, Zoho Books for real-time accounting. Payment solutions, mobile wallets, online payment gateways, and point-of-sale systems. Financial analytics tools, dashboards and forecasting platforms. Blockchain and cryptocurrencies. Emerging options for payments and contracts. Robo-advisors and AI. Automated financial planning and risk assessment. Adopting fintech enhances efficiency, accuracy, and financial agility. In summary, Module 8 provides you with a robust foundation in financial management, encompassing planning, accounting, working capital, funding, analysis, cost control, risk mitigation, taxation, and emerging technologies. Mastery of financial principles equips startups to make strategic decisions, optimize resources, and achieve sustainable growth.